I hope all is well. I know it's been a while, but I'm glad to be back on the channel and I'll be posting very frequently starting today, the rest of this week, and I'm going to get in a good schedule of posting every single day. So I'd like to say that I'm officially back. I had a little bit of a break. I had to get back to school and just have been really busy recently. Haven't had a bunch of spare time to be working on this channel, but I'm back kind of settled in and I'm going to be posting every single day again. As always, I'm going to be going over the S&P 500 E-mini futures review for today, Tuesday, September 2nd. I have a great day and a banger of a video to come back on. Just a couple of things before I get started. A huge shout out to Troy H., my mentor, before I get into this. And don't mind the purple and orange lines. Those are for tomorrow, so just leave those alone. And I'm just going to go ahead and talk about the price action of today and the best trades that I thought that were available and pretty nice to catch. There was, over 60, 65 points today and pretty quality setups. So it was very, very interesting day. Hopefully you guys killed it and made a ton of money. Without further ado, I'm going to go ahead and get into the price action. As you guys can see, there was a major, major gap down from the weekend. So of course, with this big of a gap, it's always kind of a surprise. That's over a 70-point gap down. It's the largest I've seen in a very, very long time. So of course, that's something just to be aware of. We start off so far away from the EMA. You can see over 40 points away from the EMA. Let me get this off for a second so you guys can actually see. Start off, at the point of us starting, we were about 60, 50 points away from the moving average. So that's always something to be aware of. That the moving average is going to try to catch up at some point, and you could have been very aware of that this morning. So of course you start off with a pretty decent bear bar down, then you get follow through with 3 bull bars up. Yeah, these aren't the most impressive bars. 2 has a pretty long wick, halfway, not great inner bar strength. Same thing with 3, pretty doji, not great inner bar strength. But then 4 is a really good, kind of tries to pull back. You start off, you finish with probably 80 to 90% inner bar strength, and then you get a micro gap, and it's ending above the first bar. As you can see, there's a gap here where it goes above the first bar, creating a micro gap as well. And I think that just shows that this is probably in a breakout mode instead of kind of a trading range coming back down with this kind of being the high. So I think you could have maybe a small size bought at 4, and then within the bar 5 and even the close of bar 5, you could have just kept on buying. You could have even played it a little bit safer, and you could have waited and bought after 5, expecting it to make a run to the EMA. As you can see here, 5 is kind of climactic, but it finishes with a massive micro gap and almost perfect inner bar strength. And you can see it rips up 10 points. So if you weren't super greedy trying to look exactly to get up to the EMA, just kind of something close, you could have seen at least maybe sold for 10 points, or honestly you could have at least walked away with 2 after seeing the close of 7. But I think a really good buy was to buy some small size in 4, maybe size up, scale in a little bit in bar on 5 because of how nicely it went up, and you could see the massive micro gap, and then take profit somewhere up here around 15 to 20 points. So that was a trade where you would have been done by 10 a.m., 9:50. Would have been a very quick trade, and after watching this in the morning, I thought, I don't think the day could get any better, but it just kept on producing really good trades. So you can see, kind of get 2 pushes up, 1 pullback on 4, 1 pullback 2 up, and then we kind of go sideways, kind of climactic. You could even say it's 1 pullback 2, pullback 3, climactic. We get sideways trading range, a couple good pushes, and then we kind of get a follow through back down, maybe creating kind of a broad trading range. So we have 14, which is not really a clear indicator, pretty good inner bar strength. But then you see 15 kind of collapse down, gets a very good close, probably around 80, 85% inner bar strength with a massive micro gap, which is a massive strength indicator that this is going to get at least somewhat of some follow through. So you could have easily caught and sold. I would have sold the close of 15. You could have brought that down for at least, 5 points. If you caught it at its absolute peak, you would have been able to get down for 9 points. And now you see this 16 creates a micro gap as well. If you really wanted to, you could have sold on 15 and stayed in, expecting a pullback. So you could have seen a pullback on 18, maybe even waited on 19 as a confirmation right here. So you get one pullback and then a great bar on 19, finishing, closing below the close of 18 with, almost 100% IBS. You now are thinking that this is probably the second leg going down. So you could have sold 15 for a contract or two and then sized in, scaled in on the pullback. That would have been a professional level trade. And as you can see, with scaling in as well, you could have made thousands of dollars over. It would have been over 20 points profit. Probably what I would have done though is sold 15, took in profits down here for probably 8 to 9 points. Pull back on 18, you get confirmation of a second leg on 19. You sell 19 again. You let this ride down. You take, you could take 5 points in here. You could see this micro gap and stay in and ride this down for about 10 points. And then if you were really risky, you could even have traded the third leg. You see another pullback follow through. You're going to get another micro gap on 25. You ride this down for, you could have even walked away with 10 points, 5 points on this trade as well. So you start off the day, you get one, pullback two, pullback three, pushes up, sideways, and then it reverses down. One, pullback two, pullback three, pushes down. At this point, you've had two major moves. You're thinking maybe this is a very broad trading range at this point, and you can kind of see that's what it creates. It then tries to push back up to the EMA, and there's definitely a couple trades in here. You can see it's kind of lost steam, anywhere from 27 to 32. So you could know that it's probably going to try to get somewhat of a reversal, at least trying to test the EMA. It's pretty far away at the close of 32. You can see that it's over 12 or around 12 points away. So you could expect, three pushes down. This is pretty climactic. You can see the bears are finally taking profit. It doesn't look great for the bears to keep on going down. You have three pushes down. You could argue it's even four. And then you get a good reversal bar on 33 with a good close with strong IBS with a good micro gap. You could have bought 33 and just rode it up just a little bit. You could have made 5 points on the peak of 35. So then you get two pushes up, or you could say 3 or 4 pushes up to the EMA, but I would say it's 2. 32 through 34 is 1. Pullback, push up to the EMA. It's the first time crossing, so there's sell-off. There's resistance 40, but the bears are kind of giving up at this point. They've just had such a long rally of so many pushes down. The bulls are trying to finally take over. You get a really good close on 41. And if you wanted to be a little bit more risky, you could have bought 41 expecting, this is tried to test the EMA. It's probably going to break through. It's, not the highest probable trade, but if you use the right size with a short stop loss, you could have, after a great bar on 42, you could have made at least 5 points to 10. And then after you see this, 41, 42, 43, you kind of know that this is, a new breakout. So you have 2, 1, 2, but now crossing the EMA, it restarts the leg count. So this is now a breakout leg 1. There's probably going to be some sort of a second leg up for the bulls at this point. And you get a pullback on 44 and 45. And 45 is one of those perfect bars for me. It tries to go down to the EMA. It's kind of a pullback failure bar. You can see it really tries to pull back. People are buying a ton when it's pulling back to this good discounted price. So you can kind of tell here that this is probably going to have a second leg. So you could have bought the close of 45. You could have waited for confirmation on 46, and you would have been able to scale up at its peak, over 20 points. If you really wanted to be risk adverse, you could have said that 41 through 43 restarted the leg count. This is 1. You wanted to wait for confirmation of a second symmetrical leg. Wait for 46. You see 46 with perfect IBS. You wait even one more for 48, creates a massive micro gap with great IBS, great closes, and you buy 48 and ride it all the way up for about 15 points. But like I said, I think probably the best trade of the day was seeing this breakout, restarted the leg count, needs a second leg at some point. 45 pullback failure, you buy 45, you ride this up for, over 20 points, 23 points at its peak. The rest of the day, I thought, after so many good trades that it was going to cool down at some point, but you could even see, you know, you could argue that this is one, pullback two, pullback three, four pushes up past the EMA. I think it's two. I think 41 through 43 restarted the leg count, but there's arguments on either side. And then once again, we're just going back to what I was saying earlier. 52, clearly get out of the trade bar. You're 12 points away, very far away from the EMA. 52 is a clear indicator that you're losing steam. It's kind of a bar where this isn't going to go a whole lot higher. Great reversal bar. On 53, you now know that probably 53 is going to get some follow through back to the EMA. If you were trading, it's a little riskier, but you could have just held this down to the EMA and made about 8 points there. You can see there's one pullback, two, pullback, three, almost like you could say 3 or 4 pushes down to the EMA, just getting back to the moving average. And then towards the afternoon of the day, we kind of just get a bull channel up. 64, 65, you get one, pullback two, pullback three, bunch of choppy, maybe 4 legs in there, and then the last 30 minutes you get this crazy bar pushing up. So yeah, very interesting day. I think there was lots of money to be made if you were trading either way today. If you were a bull, you could have caught early and then caught kind of in the afternoon. If you were a bear, you could have also caught kind of in the morning session a lot. Could have just caught going back down to the EMA. A lot of great price action and trading range behavior today. I'm going to really try to start posting a whole lot more, guys, like I used to do, having a video at least 4 days a week, if not five. I'm going to try to push for five. Once again, I apologize for. Um, I'm sorry. I apologize. Just kind of for being away from the YouTube channel for a little while. Like I said, I was just really busy, but I'm really going to get back in the flow of it and really break down not only the trades that I think are really, really good, but also the trades that I take. I'll be trading tomorrow, so I'll go through all the best trades of the day and also the trades that I took. I'm really excited to get back this YouTube channel going. I have a lot of really good plans for the future that I can incorporate with you guys. And I'm just really excited to get this channel keep on moving, keep on going. And thank you guys for tuning in. As always, shout out to Troy H., my mentor, and thank you guys for tuning in. Please leave any questions, comments, concerns below. And if not, I'll see you guys tomorrow. Bye.